Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, let's take a look what is happening on the euro currency. Well, yesterday price action was relatively tight. You'll see, as we have discussed in our weekly research, the daily time frame picture, market has hit the 127 extension right around the confluence support. So that was the 126.68, this 127 from that pattern A, B, C top is the target of this pattern. Slightly lower than 127 extension of that swing to the upside and slightly lower than this confluence support. So we can see market now is calling around the confluence support area 127.35, 127.40 area without any precise direction. And if you recall our discussion of the weekly time frame, you'll see that market stands right in the range of indecision, because the upper border of this range is the low of this most recent thrust wick that in fact holds all this coil inside of its range. Although market has moved below it, this distance in terms of the weekly time frame is very small. So we could say that market is still calling right below this low, and it could return back in any moment. The lower border is 126.40 area approximately, the level that's very significant since this is 25 by 5 moving average on the weekly time frame, as well as the significant point of the MACD predictor. To say that market has more bullish chances and to start searching for the potential buy signals, we need that market returns right back in this coil. In this case, we could say yes, probably that was not quite a failure breakout, but that was shallow breakout to the downside. Market returns right back inside of the coil. If this will happen, that will significantly increase the chances that market will proceed a bit higher inside of this range, and maybe minimum target even could become the previous highs. From another point of view, if market will break this level to the downside and will accelerate lower, this will give us confidence that probably our expectation in the medium term and our discussion of the bearish scenario will dominate, and we should start search for the possibilities to enter on the short side of the market. Because if this will really happen, and if market will continue to move to the downside with some thrust and acceleration, that could lead market to the 160, or if we will take a look even in greater perspective, we can't exclude the possibility to move to the par, since the last barrier on the monthly time frame is 120, 116, 17 area that holds market within the couple of years. That's the last fort of the market, in fact, fortress. And if market will break this level, there is no significant support levels below this area, and that really could lead market to right to the par. But this is a bit extended view. So what we could do currently? Well, the answer is obvious that if market still stands in the area of decision, we can't take any long-term positions. We can't marry any position. We need to trade on the intraday time frame, and based on some intraday patterns that we will find, just to work with this pattern, stick with this pattern, and take profit accordingly where patterns suggest to. So let's take a look on the 4-hour time frame. On the 4-hour time frame, we see trend holds bullish. Market shows the divergence right in a cluster of support on the daily time frame that is forming bearish wedge. The market has shown now the breakout of this wedge. Well, since we have discussed this free drive pattern on the previous week, and probably I have missed with the first drive low. Initially we said that the low of the first drive is right here, but probably we should speak about first drive in terms of this swing. It's first drive, second, and that probably third, because based on this current price action, just now wedge is looking clearer than previously, and that is look more sharp. So probably that could be the three drive pattern, and market now shows the breakout to the upside. But this is not change the overall picture, since the first target to watch for is right here, is the weekly pivot point, and stands very close to the first conference resistance, 127.93, 127.94. So if this will be the pullback, that's the first area to watch for. The second area to watch for is right here, weekly pivot resistance 1. It's 128.27. That stands to the next conference support, 128.44, 128.60 area. So two potential destinations. Both of them could be reached, since we know that when market stands in the bear trend on the daily time frame, it usually, and if retracement comes, usually weekly pivot resistance 1 holds the retracement. That's why both of them could be reached by the market. That's the first pattern to watch. The second pattern is on the lower time frame, on the hourly time frame. That could be the head and shoulders, reverse head and shoulders pattern. You can see that this pattern has started from this nice butterfly to the downside that was formed probably yesterday, or 1618 extension. That's very typical ratio when the head stands 1618 of the shoulder. So that is left shoulder, head. Now head is completed. We need to see the right shoulder of this pattern. So based on this pattern, we could expect the retracement to the 50% support, or 618 support is 126.87, maybe 127 area, somewhere in this area. So we need to wait the pullback. If this will be really so, what's the target could be? First of all, based on the butterfly, ultimate target will be right here, 1618 extension of the whole butterfly move. It's around 127.88. The second target is the target of the head and shoulders. That blue line is the distance between the bottom of the head till the neck, counted in the area of potential breakout. Or you could use some ABC pattern that will be formed with this retracement. Usually when you use the 1618 extension of this head and shoulders pattern, it very often gives the same distance as the classical target of the head and shoulders. So that's the second pattern to watch for. Now that's your decision what pattern to trade. Or maybe you could trade even both of them, since they are in fact stands in the same direction and one is the part of the another. The failure point of this potential development is these lows. So if market will not hold at the 618 support area and will take out this low, then probably this pattern will fail and we could see some further downward move. Well, or this pattern could shift, for instance, to the double bottom, but in general that price action is not very typical for the creating of the double bottoms. Usually double bottom forms with some sharper swings, and these swings a bit more contracted in terms of the time, because head and shoulders pattern is a bit spread over time. Well, that's why I think that hardly will happen. But anyway, I suppose that the failure of this pattern will be the lows of the head. So that could be some trading plan for coming trading session. For instance, we could trade this current potential head and shoulders pattern with the entry point around 127, 126.80 area, with the steps somewhere below 126.60 low, below this low. Well, I think that 30-40 pips will be enough to place in the steps right below this low. Well, the potential target is right here. It's around 127.88, 128 area. Now take a look. If we will look at this area on the 4-hour time frame, we'll get precisely the first confidence resistance. So that potential head and shoulders pattern will point and points now on the same area. It's around weekly pivot point and first confidence resistance. So that is an example of the trading plan that you could use. Maybe you will find something more interesting, or you could trade it just as the wedge or even as the free drive pattern. In this case, your minimum target will be these highs, these swing highs, somewhere around 127.94, 128 area. But again, that is again very close to the target of the head and shoulders on the hourly time frame. So that's probably all for today, because I personally do not see anything else. Well, so wait for the reaching the levels that we have specified and decide, would you like to trade these patterns or not? Because till the market stands in this range on the daily time frame that we have discussed, we probably will be focused on the intraday charts to make some more significant decision about the direction, and taking some longer positions we need to break out either to the upside or to the downside from this range.